devastating op-ed today in the New York Times. It's called Why I'm Leaving Goldman Sachs. It's by Greg Smith. He's been at Goldman Sachs for 12 years. And he explains the horrible culture that has taken over there, where they basically screw over their clients to make more money. And he said, I thought we got into this business to help our clients. We used to have the right culture at Goldman Sachs, but it has basically been destroyed. And he names names by Lloyd Blankfein, who's now running Goldman Sachs, and Gary Cohn, who's the president of Goldman Sachs. And here's how he describes some of what's happening at Goldman Sachs. He says, quote, "It is toxic and destructive, the climate and the culture there." He said there's a decline in the firm's moral fiber and that there are morally bankrupt people there. Then he describes how they treat their clients. He says they call their clients Muppets. In other words, to be manipulated, easily manipulated and mocked behind their back. Also, they are ripping their eyeballs out. That's the language they use for their own clients. And the whole idea is we got to get paid. And that's the driving force there. Now, he explains in a little bit more detail about how they screw over the clients. Quote, "Will people push the envelope and pitch lucrative and complicated products to clients even if they are not the simplest investments or the ones most directly aligned with the client's goals? Absolutely. Every day, in fact." So meaning it doesn't help the client's interests? Who cares? They're Muppets whose eyes should be ripped out. Let's screw them over, make sure it helps our interests. Now remember, these investment banks are supposed to represent these clients, and they get paid to represent those clients' interests. And what he's saying is, it's nonsense. Like, we get the money from them, but meanwhile, we're making our own bets. And a lot of times we use those clients as our suckers to be on the other side of the bets, which we know which way they're gonna go. In fact, we know this because Carl Levin did an investigation in the Senate and found the emails where they laugh about how they gave clients, quote, shitty deals so they could make more money. We know about the deal where they rigged one of the products along with John Paulson, who runs a hedge fund, and they specifically picked the worst mortgages to put in there. And they sold it off to their European clients like, oh, these mortgages, they're great, I'll tell you. And then they turn around and bet against those same mortgages. It doesn't get any worse than that. So now he explains, being an insider at Goldman Sachs for the last 12 years, the different ways that they screwed over their clients. Let me quote. "Executive on the firm's axes, Goldman speak, for persuading your clients to invest in the stocks or other products that we are trying to get rid of because they're not seen as having a lot of potential profit." So this is one of the different ways they screw over clients. It's called axes. And they're like, okay, we got this stuff that we hold. And by the way, this is why Volcker wanted to do the Volcker rule, which was to separate out investment banks and what they do for their clients and proprietary trading. We wanted to get rid of the proprietary trading. That's the trading they do for their own benefit. Because if you don't get rid of it, all they care about is the proprietary trading for their own benefit. So they think, okay, great. What do we want to dump from this stuff that we own? Well, let's sell it to our clients who are suckers. Why would anybody do business with Goldman Sachs? I mean, here's an insider who's a vice president saying, they're looking to rip your eyeballs out. Here's one way they do it. Here's another one. They call hunt elephants. Get your clients, some of whom are sophisticated and some of whom aren't, to trade whatever will bring the biggest profit to Goldman. Their interest be damned. Okay, let's go hunt elephants and crash our axes or whatever the hell else we're doing to these Muppets. And then finally, point 3, find yourself sitting in a seat where your job is to trade any illiquid, opaque product with a 3-letter acronym. Now, why is that important? It's important that it's opaque so that there's not a good market for it, so people don't know what its real price is. So then Goldman Sachs can set the price to their own advantage. So get all these people and go, oh yeah, this thing's totally worth $20, I'll tell you, you better grab it right away. Meanwhile, they bought it at 10, so they make up the difference. The whole entirety of the operation is about how do you make more money by screwing over your own clients. It's an absolute disaster for Goldman Sachs. So now, how does Goldman Sachs reply to this? You think they're going to take this lying down? Of course not. Here comes the hatchet job against Greg Smith, who dared to speak out against Goldman Sachs. Lloyd Blankfein writes a letter, and so does Gary Cohn, to their own employees. Oh, gee, did this make it into the press? They say, quote, in a company of our size, it is not shocking that some people could feel disgruntled. Of course. Disgruntled former employee. Don't listen to this Smith guy, come on. He's disgruntled. Point number 2. Across the firm at all levels, 89% of you said that the firm provides exceptional service to them. Oh, I see. Oh, you did an internal survey, and then your own employees and clients said, oh, we're happy with you. Okay. Oh, really? Your own internal survey says 89% are happy. Wow, that's really, really convincing. Come on, man. So now, Goldman defending itself is no surprise, and they're going to leak everything they got against this guy. You watch the upcoming days. Oh, Greg Smith did this, and he did that, and he traded this, and he was actually out for his own good, and he made this kind of money, and he actually did things that were wrong to the clients. They're going to throw everything and the kitchen sink at him. But of course, who else is on their side? More importantly, the rest of the entire financial media establishment. CNBC all morning long. Oh, come on. Who's this? Well, if people didn't want to do business with Goldman Sachs, I guess they wouldn't do it. You know, it's a free market. So what's Greg Smith complaining about? But wait a minute. It's not a free market. There are only very limited what they call market makers in the financial world. So if you want to make a really large trade, if you're a hedge fund or whatever else you might want to be, there's only a certain number of people you can go to. In fact, now there's less competition because Goldman helped to kill Bear Stearns and Lehman. So since they're eliminated, you have less options. You got to go to Goldman. And then Goldman goes, let's rip their eyeballs out. But CNBC doesn't report that. They're like, no, protect Goldman, protect Goldman, protect Goldman, because we got to have them on as guests and we have to suck up to them. That's what they think their jobs is. Forbes, very similar. Nathan Vardy has already written an article. He says, quote, with Greg Smith's resignation letter in the opinion pages of the New York Times, the world has a front row seat to watch the midlife crisis of an executive at Goldman Sachs. It's a midlife crisis for this disgruntled former employee. Of course Goldman Sachs is right. Are we doing a good enough job, Goldman Sachs, of protecting your ass? Yes, yes, yes. Okay. And then he intimates that he's not a high-level executive at all. Please, there are a lot of vice presidents at Goldman Sachs. This low-level guy, what would he understand? Nathan Vardy continues, it took him until 2012, almost 12 years after signing up at Goldman Sachs, to figure out there was something toxic going on. Why didn't he complain before? These are all classic attacks against the whistleblower, which of course Nathan Vardy then says, he's not a whistleblower. He's not a whistleblower. Disgruntled former employee, okay? And why do they do these attacks? They're like, well, what do we got on the guy? He worked with us. He worked with us. He should have complained earlier. Ha ha, he should have complained earlier. But Vardy, Greg Smith explains throughout his whole op-ed, look, when I first came in, this wasn't the culture. And by the way, what is left unsaid, and I'll tell you, is part of what helped to change the culture at Goldman Sachs. In fact, it was absolutely integral to it. And what CNBC, et cetera, won't tell you is that Goldman Sachs used to be a privately owned company, so that if they lost money, the partners lost money. And if they lost clients, it hurt the partners. But they turned it into a public company. So now that it's publicly traded, the executives don't give a damn about the shareholders' long-term value. They don't care about their clients. All they care about is how much money am I making today? And they don't bear any of the downside. So if the company crashes or the clients do poorly, Lloyd Blankfein and Gary Cohn say, who cares? How much money did I make? In the old days, they would have cared because they wouldn't have made money. They would have lost money if that happened. Now, well, that's the shareholders' problem. It's a public company. Ha ha. I took my money and I'm running home anyway. Remember, that's what happened with Dick Fuld at Lehman. He walked away with $600 million from a bankrupt company. So what does he care that it went under? So that's the situation we have with executives that have captured this system and perverted it and ruined it and turned it into this toxic culture, as Greg Smith explains. And it happened over the last 12 years. And he does a great job of explaining how it happened. And then finally, Nathan Vardy says, if those investors are not already entering into Goldman deals carefully now, they never will. In other words, come on, we already told you that Goldman Sachs might be looking out for its own interests. It's up to you to protect your own interests. And you should be a little bit more savvy knowing that Goldman Sachs is obviously going to screw you over. So it's all your fault that Goldman screwed you over. But as I explained to you, they don't have that many options. There's only a certain number of banks they can go to. There's literally nowhere else they can do business because too big to fail got even bigger after 2008. So that's the disaster we find ourselves in. Greg Smith points it out. So of course, the rest of the establishment now despises Greg Smith, but he's 100% right about this.